Oh man, so this warning signal just flashed, which indicates how many days we could be away from the bottom of this bear market. We're going to go through these on-chain metrics. We're also going to look at the technical levels on the charts, plus some interesting details around Tiffany. Yes, Tiffany partnering with CryptoPunks. We've also got some interesting news on the football front as well, and a whole bunch more, guys. Smash the like button. Don't forget to subscribe. As always, if you want to check out OKX, links in the description. That is what I'm going to be using to be trading for my long-term strategy in terms of dollar cost averaging, using their recurring buy feature. It is the only feature that exists. No other exchange has it, and that is the only reason I'm using it. Not being sponsored. There is an affiliate link in the description if you want to use it, which supports the channel, but that's what I'm going to be using to build my pies and invest in this next bull run. Now, as you can see here on Bitcoin, we're up 0.4%. The market has yo-yoed slightly today. We just opened up about an hour or so ago. It opened up in the red. Now it's about flat, and the US market is starting to get a little bit sober because we have a big week coming up, okay? A really big week coming up with some important earnings. Uber, BP, PayPal, Airbnb, Starbucks, a bunch of important names coming up this week. Fit and Greed Index has notched down to 33%, and we can see here we're still in this upward trend, but there's a hidden pattern which I shared in my video earlier, which you have to go watch because there is some bearish divergence in this chart, which suggests we could be getting some sideways / downward action. Now, it's important to know we are still in this uptrend. We have higher highs, we have higher lows, and we have this line characterizing our upward trend. We can technically come down, collect support at the 22,000 level, and as long as we bounce, we can show strength. As long as we break through and create another higher high thereafter, that is what we're looking for on the short-term basis. But long-term, what are we looking at? Well, there's some really interesting on-chain metrics to look at. And you guys know that I've been talking about this relief rally that I think can be happening here on crypto, right? I've spoken about this relief rally, and I think we could be getting this move up to what I call 2930. But what are the on-chain metrics showing? Because it's all well and good me showing my conviction, and I've shown you that because I think we're going to run into our EMA ribbon. But let's use some other pricing models, right? We can look at the 200-week moving average. I shared that with you earlier in the video earlier on today. We've now finally closed back above our 200-week moving average. That is really good because otherwise that was acting as overhead support, which makes it difficult to get any bullish momentum. So that's one coup for us, is that we've managed to close above that. Really, really good. But what else is overhead? Well, we also have the 111 daily moving average. That is sitting at 30K right now. That's this pink purpley line here, sitting at 30K. Why is this important? This is one of the components of the pi cycle, and you can see here this will also continue to act as resistance in the chart as well. And then another pricing model we want to look at is that 200-day moving average sitting at $35,000. Now, why am I sharing this with you? Because I'm sharing this with you because if we break through this 24,000 level, and I mentioned that 24,000 level is a key level for Bitcoin to fight for, and you can see the bears are not letting up easily. We've been rejected 2-3 times here now, and it's going to be a key level. But once we do break through that, what am I looking at? Because I'm not thinking that, oh, once we break 24, we're going to head up and create new all-time highs. No, I'm saying what is a sensible move that we can take advantage of? And from these pricing models, you can see you've got overhead resistance at 30K and 35K. So I will expeditiously be taking profits on any of my long trades between 24 and that 30 level and leaving a little bit to try ride towards 35. That ties in with what I said to you guys is also our weekly EMA ribbon, right? If I head on over to this clean chart, and I go over to weekly and I bring out the EMA ribbon, what did I always say? I always shared this with you. The EMA ribbon is going to act as resistance, and the EMA ribbon ranges between 29,000 and 35. Okay, not a coincidence. That is confluence with the pricing models I'm showing you here. So what I'm saying is that is the scenario I can see from the upside, and that's what we want to take advantage of. To the downside, I'm still very, very vigilant. I'm not like some of these guys that are like, no, we're going to the moon now. No, we've got to understand and appreciate that things have not improved yet in the economy. Okay, last week was a lot of hopium, and I understand why. The markets think that this is the worst. This is peak, worst GDP figure, worst interest rate hike of 75 basis points, and things should improve. But we need to see that. We need to see the data show that. We need to see inflation come down, and that's what it's going to come down to right now. Don't forget, we've got the non-farm payrolls coming out on Friday. Do not underestimate how important this is, guys, in the market. This is huge. The market is relying on the fact that this is a paper recession. In other words, that, you know, because labor is strong, demand is going to remain high, wages are high. We're not actually in a real recession. It's just showing negative growth, right? But the reality is, if that labor market starts to show some chinks in the armor, this market can dump and dump quickly because it will panic. That's literally the only thing they're hanging their hat on right now, is that labor market hanging in there, okay? So if we do see that demand start start to whimper, maybe in the back end of this year, maybe in late quarter 3, early quarter 4 in the winter kind of period, then we could see retest of those lows on Bitcoin. And that is what I want to make sure I'm prepared for. I don't want to get excited in this relief rally, but I also want to take advantage of it. So hopefully that makes sense. I don't want to be one of those guys that's sitting on the sidelines as Bitcoin runs up to 30,000 saying, nope, it's going to hit 17,000 for sure, because nothing's for sure in investing or trading. Right. Now, what else do I have for you guys? Well, I'm also going to show you this. And what this is your on-chain cost basis. And the reason I want to show you this is the short-term holders cost basis continues to decline. And this is really, really important. In a bear market, you want to see this decline, and the closer it becomes to long-term holders, in other words, your short-term holders have a similar cost basis to the long-term holders, that is good. Now, what does this mean? Well, what this means is we are seeing a distribution from short-term holders with high cost bases, people who were buying in the euphoria at 60,000, 65,000, 69,000, transitioning to new short-term holders, and not long-term holders, but new people who are short-term in the market, who are more ambitious, who have more optimism in the market because they've only just entered. Imagine you've just came across crypto right now, or your friend just told you about crypto right now, and you're watching this video. Don't forget to smash the like button and subscribe. You're going to have huge optimism. You're buying Bitcoin at price points last seen 5 years ago, and you're getting to see an opportunity to run this back up to all-time highs. There's a huge risk to reward. You're not having to go create new all-time highs. You can see that Bitcoin's already been at 69, so there's huge optimism, and this redistribution gives you more hodling behavior and gives you a clue that soon we can start building our way back up. And now, how many days, right? That's why you click this video. How many days will this bull bear market last? This is what I want to share with you. And what I'm sharing with you is 2 lines which I want you to focus on. The orange line is your Bitcoin realized price. That is the aggregate cost basis, right? What is your average cost for everybody who holds Bitcoin right now? And then I want to share with you the blue line, which is the realized price, the same thing, but just for your long-term holders. Now, what you're seeing is an interesting phenomena, and you're seeing that the realized price is crossing high for the long-term holders, is crossing higher than the average realized price. Why would that happen, right? If you look at the majority of time, let's pop me there. If you look at the majority of time here on Bitcoin, you will see that the blue line is always below the orange line. In other words, long-term holders have a lower cost basis than the rest of the Bitcoin market, the whole Bitcoin market. There's certain periods where it crosses higher, and in those periods, you see this characterizes the bear market. And you see the first time in 2012, it lasted 288 days that this phenomenon lasted. And the time it took to get from the bottom, once it first crossed over, was 2 days, okay? So it crossed over, 2 days you formed your bottom. You stayed like that for a while, but it showed that that was the start of the recovery into the next bull market. Similarly, if we look into the 2015 area, we crossed, the blue line crossed above the orange line. It took 77 days from then to hit the bottom peak, right? And then you stayed under there for 575 days until you pop back out, okay? And finally, take a look at the 2019 market. Blue line popped above the orange line, took 68 days from there to form a bottom, and then you stayed in there for 248 days. And this is why I struggle just following the data. I want to be a permanent bull, right? I want the price to go up. I'm in the market. I'm 85% in the market, and I want a dollar cost average some more. But I have to be real of how long can this bear market last? And if you look at the data, right, we've only been here. This is us right now. This slither of purple here right now. That's not my screen having an issue. That's just how we are right now, okay? The blue line has just crossed. It's been 17 days. In other words, if we were to follow this cycle, okay, if you were to follow this cycle, you've got another 51 days before you hit your bottom. I'm not saying that there will be a bottom. I'm just saying 51 days. If you follow this cycle here, you've got another 60 days or so to hit the bottom. Okay, so that's what these metrics are showing. But more importantly, then, when are we going to hit the bottom? Because you can see that's varied, right? This time it took 2 days to hit the bottom. This time about 70 days. This time about 70 days as well. What's more important is to focus on the duration that the blue line is above the orange line, because that's your bear market. And what you can see right now is that's just started. And that is one of the reasons why I find it very difficult to see that we can suddenly just go and moon right now. I feel like even if we have formed a bottom, even if that 17,600 is the bottom and we'd never go lower than that, I still feel as we're going to be suppressed in this range for quite a while. Now, we may get a relief rally up to 30, but I still think the macroeconomy has not shown green shoots of recovery. I will change my mind if and when I see inflation start to tumble, if and when the Fed starts talking about pausing rate hikes. then we can get ourselves ready for a sustained rally, an exciting rally. Then we can try break above 30,000, and then we can talk about all-time highs. So that's where we're sitting now on this market. A few other things to point out for you guys in extracurricular news. 2 soccer teams transfer a South American player using USDC. Okay, now ignore the bit about collateral damage. I mean, there's always a bunch of stuff, but the bit I want to focus on it is they just did a football transfer using crypto. To put this into context, you can estimate that the football transfer market each summer is about $8 billion, depending on which figure you look at. Imagine $8 billion of transfers coming into crypto. That could be huge. In other news, we've also got Tiffany, right? Tiffany & Co. announced their partnership with CryptoPunks. You can now buy this CryptoPunk Tiffany NFT item for the price of 30 ETH. So if there is a significant other who loves Tiffany jewelry and happens to own a CryptoPunk, go ahead and buy one of these for 30 Ethereum or $51,000 US. But again, just the reason I want to share with you is it's showing that blend between the digital world and the physical world here on NFTs. And that's where the huge game changer is going to be. Companies who deliver on that are going to do really, really well in the NFT space, where they bring in and tie the the digital NFT with the physical product. That's really, really important as well. One other thing I wanted to share with you guys was this, which is really interesting on the Ethereum side. And what I wanted to show you here was how you can see how the Bitcoin to Ethereum's dominance changes. And you can see that whenever we're in our suppress period and on the run up, Bitcoin takes dominance, right? This is peak Bitcoin season. When you're during your lows here, this is the best part of 3 years. Bitcoin sits here, it takes dominance. Most of the money's sitting in Bitcoin because people are fearful. We're back at lows. You're in a bit of a crypto winter. And then as Bitcoin climbs, you start to see this fall, right? As the price starts to climb towards its all-time highs, you see Bitcoin season start to fall, and then it turns into ETH season. Interestingly, from the 8th of December 2021, Ethereum dominance peaked. You guys will remember peak NFT hype, peak DeFi hype. Ethereum was doing really, really well. Now, I know intraday, like if we look at the daily timescale, Ethereum's back into popularity, right, over the last couple of weeks. But again, looking from December 21, you're seeing that Ethereum dominance decline, which reminds you of this period here after the 1st of Feb 2018, which suggested that we were rotating to our bottom. Bitcoin dominance starts to peak. How long are we going to be in this period? Who knows, right? Could this winter be like this? Another 18 months, 24 months in this period before we then start to climb, and then the Bitcoin dominance starts to fall and it rotates back into Ethereum and alts as well. Just wanted to share that important graph with you all. And finally, just to kind of wrap things up, I wanted to share this important thing with you, which is the monthly chart. Coming onto the monthly chart, we obviously closed our month green, which is our first month we've seen for 4 months closing green. Really, really good. We need to be careful that our EMA ribbon doesn't act as resistance. I want to see a positive green going into our EMA ribbon right now because we don't want this sending us back to the downside. Another thing we can look at here is if I remove the EMA ribbon and just bring out our 50 moving average here on the monthly chart, you will see we are holding that as support. We've now closed back above it, which is a huge coup. And if we can maintain another green candle here on the monthly and have a good positive August, that can set us up for getting some momentum here on crypto. So there you have it, guys. There is a wrap up of everything that's going on right now in the Bitcoin market. Tough time. I'm still continuing to dollar cost average, but I'm not chasing green candles. I'm waiting for pullbacks. I'm allocating strategically, but I'm in the market. I'm hugely in the market. If you want to understand why I'm in the market right now, why I wouldn't want to risk not being in the market, and why you shouldn't be procrastinating, go watch this video here, smash up the likes, don't forget to subscribe, and I'll see you in the next one.